All right. Hello, everyone, and welcome to another daily market review. Today is Tuesday, February 17th, and we're looking at S&P 500 futures. Now, obviously, we did have futures open for Monday, the President's Day, even though it was federal holiday, but it was a small trading day, and I usually don't trade those. So last time we were looking at this on Friday, February 13th, and let's quickly go over what happened since then and what Tuesday was like on the futures. So, first thing first, I did say that scenario number one is if and only if we come here to this area and we start chopping around, we're likely to break out. We did not do that. We only came here on Monday. Obviously, given that it's a federal holiday and it's not like a full trading day, always everything that happens, anything that happens, always give it a little bit of a discount. So it could be a fake out, but in this case it didn't even reach the area right here. It went much lower, so I would not count this as a meaningful breakout attempt. So we were expecting it to come here. It went much lower, and it went according to scenario number two, more like according to scenario number two. Not exactly, but the similarity is that it was ranging for quite a while. I did have this as a range and then this as a lower range, and I did say on Friday that if we come here in this gray box, in this gray area right here, right, in this one, I did say that we're likely to get a sweep. A sweep means that we basically come in, we just go up from here. We don't spend much time. We don't spend long. So that's exactly what happened. We came in here, right here on Tuesday open. Came in here, just straight up, and I did say once we come here, we're just gonna go slowly up. It was much faster than I expected. It was more of this kind of action instead of this, but anyway, I did say we're gonna go up. I did say that we're not gonna break down here, we're not gonna go down, we're not gonna go lower. This is a meaningful demand area, a meaningful support zone, so we did get longs right here. You could have gotten long right here. If not, once it reached this level right here, you could have gotten long from here and just take it from there. Probably close it around here, since this is the area where we failed to go higher. So let me just get rid of the drawings and we will continue. Oh, there's more actually. Let me quickly unlock these. There we go, nice and clean. Okay, so what do I think is gonna happen from now on? What do I think is gonna happen tomorrow, Wednesday, or anytime between now, 10:30 p.m. Pacific, and tomorrow, Wednesday? I think it looks like the market wants to go higher. We got attempt number 1. I would count this as attempt number 2. I would count this as attempt number 3, although weak one, which is why we went much lower. I would count this as attempt number 4. Now, if we get a meaningful attempt number 5, you do know that the rule is we're gonna go higher. And then I think we're not getting it just yet, but if we keep going like this, we're likely to break out. And this is gonna be stop number 1. This is gonna be stop number 2. You could try shorting here. It could be a scalp. this is a much safer and a much better spot for shorts if we get this upward move, and I think we're getting it. If we get any meaningful kind of sideways action here, or the price keeps climbing higher, we're most likely going to go higher all the way to here, 6,950, 960. And I think just looking at the structure, look at this. Do you see this? This is a clear and very, very obvious resistance. Why? Because it was a support. We used it as support once, twice. Could argue that this is 304. Could be just 3, could be 3 and 4. But we used it as a support many times, and likely it's going to be a resistance from now on. So I think this area right here, I haven't looked at the volume profile from last week when I was trading. Today I basically just traded based off this demand zone. So, but I think, I'm guessing, if we turn on the volume profile, we're gonna see a huge high volume node right here, just because of so much action happening here. Pretty sure there is a lot of volume in here. And let's go to weekly and let's turn it on. Right, sure enough, we get this. It's a high volume node. It's a cluster area right here. It's a huge cluster, and I think we're gonna get a nice opportunity for some shorts from here to at least this level here. So first thing first, we're gonna break out. This is gonna be zone number 1. This is trouble area. This could be an opportunity for a short as well, but it's riskier. And then this one is safer, and you can short from here if you didn't get long here or here, and drive it probably all the way out to here. So that's what I think is going to happen. And then if we're not gonna break out, then the second scenario would be simply another type of range, but I don't think that's likely. But I think we're gonna get another range if we don't break out. And let me change the colorings, because this is our, supposedly this is the good scenario, so I'm just gonna make it green, like positive. And I'll just leave this as numbers. They're gonna be red, but you know what it's in regards to. It's in regards to the number of tests that we get of this resistance right here. And if we are getting test number 5, more likely than not, we're breaking out, breaking to the upside. Okay, now let's look same thing at the S&P 500. Oh, and actually going back to futures, one other thing I wanted to mention, I usually don't include VWAPs in my daily market reviews, but I do use them. And although I prefer candlesticks and price action and demand and supply, support resistance, I do use, and then volume profile, I do use VWAPs as well, volume weighted average price, and I use this indicator by this gentleman right here as BTC. You can find it on TradingView. So basically, looking at this, no, I think I was using weekly today, right? And I dropped to this is the case when I use 15 minutes, when the hourly candles, as you can see right here, the hourly candles, they're just a lot of, just a lot of noise right here. So you need to drop down to a lower time frame, and then you see clearly the swings, the zigzags, and it's easier to read the price action. So looking at the weekly VWAP, we can see that once you get long here based on this demand zone, you would go here. This could be you first take profit because it's a VWAP, right? The orange line is the VWAP, and this is usually where you drive. If you're driving from the lower bands, you're driving to the middle, you usually take profit here. Or if you're confident, if you have conviction, you drive it higher, and then around the first red bands you would either short or you would close it. Now be careful, that does not mean that anytime we're in these bands you should go long every single time, and vice versa. Anytime we're in those upper bands doesn't mean you need to short from here. But in this case, if we're having this strong upward move, you will have a pause once we get here, or even on the midline, the VWAP itself. So those could be good take profits, those could be good areas for shorting. So if you get short, or even if you don't get short, once the price goes over VWAP and then it goes back to VWAP right here, that's another place that you can get long and just you buy here and you take it up, take it to the upside. So this is one of the ways that you can use VWAP, weighted volume weighted average price, in your trading. I use it as a supplementary tool, so it's not, I don't just base my trades off of it. The important thing is to use the demand and supply and the support and resistance areas, use the price action, and then use volume profile to check yourself to make sure you're reading the price action the right way, you're getting the right demand and supply zones. And then volume weighted average price is just sort of another supplementary tool you can use for additional confluence or confluence, not sure how you say it. Anyway, so this is what I have for futures, and we're gonna go to the ETF. Haven't looked at this thing in a while. Pretty much the same thing as one would expect. We came here to this demand zone, got the liquidity we needed, got the buyers stepping in, went right here close to this zone, then we went down for a breather. This is a good opportunity to get long, and then you take it here and you know this is a big resistance, because it was a support before right here, and then right here, and it was a resistance before. So this is a significant historical level, and you know to respect it. So you usually would either get short, but since we already got short once, now it's riskier. You could just close your long if you got long here, or even if you were holding from here. So for S&P 500, the ETF thoughts are pretty much the same. If we get this, we're more likely than not breaking out, and this would be the first stop, this would be the second stop. And then I should have made those green as well. Let's try to make a rule where the uptrend, just gonna mark it green from now on, so it's easier for us to check my analysis later. And then anything else is going to be red. So the other scenario for me is going to be that we're going to range. We're going to get a range right here. I don't think we're going to go much lower. Obviously, if we come here again and we keep on chopping like this, we could break down, but I don't see that happening. I could be wrong, but I don't see that happening. Now, being a trader is important. The one thing that's important in remembering and keeping in mind, if you're a trader, you need to adjust your bias always. So if I wake up tomorrow early morning and I see that the price is here and it's chopping, and I did say it's unlikely, I'm not gonna say, oh no, you know, I'm just gonna ignore this, I'm still gonna go with scenario 2 or 1. No, I'm gonna adjust. So if I see this happening, I'm gonna adjust, I'm gonna reassess, and I'm gonna be ready to short for this coming breakdown. So no matter what you decide, no matter what your plan was, always stick to your plan, but also readjust if there are conditions that are yelling at you, they're screaming at you, saying you have to readjust. This is not happening, this is not happening, we're here, and we're more likely than not we're breaking down. You need to be always, you need to be able to always reassess and readjust and be flexible, but also stick to your plan. I know this sounds very contradictory, but if you trade long enough, I believe you will find the balance, and you will be able to um, you'll be able to know when you have to stick to the plan, when you have to reassess and readjust. And then last thing before we finish this daily market review, it's going to be we're going to look at Bitcoin. Okay, Bitcoin, ignore this because this is my longer term sort of review where I said that I'm expecting the price to go here eventually and then go down before going higher probably, or just range here. Let's look at the immediate time frame and the hourly. Let's see what's going to happen tomorrow. So here it went very close, it came very close right here, and almost close to this level where it could break out, but we did not actually came to here. I needed the price to be here because this is the big level. This is the big level. And with Bitcoin, with S&P 500, you know, just learning that it's test number 1, 2, 3, 4, 5, that's not good enough. You also need to learn the asset. So for S&P 500, it's a certain number of touches. For Bitcoin, it's probably also similar. Between 3 and 5, the level is going to break, but also the way you count those. So for Bitcoin, I would count this as 1. I would count these, all of these, as 2, just because it's much more volatile than S&P 500. I would count this whole thing as number 3. And then I would maybe count this as number 4, or maybe I would even not count it as a test. It just didn't go high enough for me to count it. And then here, it definitely didn't go high enough. So even if this is number 4, this is not number 5, okay? It's not. It's not a meaningful test for me. However, we did have at least 3, if not 4 tests before. So again, if we do come here, right, to this zone, one more time, more likely than not, we're gonna just break out. So watch out for that, and make sure to readjust based on what asset you're trading, because on S&P 500, I would count this as 1, this is 2, this is 3, this is 4, and we'd probably break out here. Just because it's not as volatile, you don't get as many chopping action at the levels as you do with Bitcoin, and you have to look at each asset separately, learn the way it moves, learn how it tests, and then you'll be able to see, oh, this is a test, this is not a test, this is how the level is gonna break. So nothing is gonna replace screen time for you. This is the most important thing you can do in trading, is apart from, you know, self-control, self-mastery, you know, working with your emotions, psychology, also screen time is going to help you a lot. All right, so here we can get rid of this. Actually, I'm just going to move it here because I still think if we come here to this, I'm just going to draw a new one. I still think that if we come here and we're just chopping around here, more likely than not we'll break out, but we need to be at this level. And then instead, my second scenario was that we're just gonna range in here. That's what we got pretty much, even though I was expecting us to go lower and have a wider range. Instead, it was just sort of creeping up here. Anyway, doesn't matter, still a sideways action. I still count it as a sideways chop. what do I think happens here? Again, if we, just like with S&P 500, if we come here, more likely than not, we break out. If not, if we don't reach this area, I think we'll just keep on ranging. So this is what I have. This is what I have. As they say, decision time, and in this case, decision time, I'm guessing, is tomorrow, Friday, February the 18th. So let's see what happens tomorrow. I'm excited. I'll try to. I won't try. I will release more educational content this week. I'll try to do 2 educational videos. If not, I'll do just 1. And then I will try to start live streaming my trades, so it's not just me looking back and reviewing what happened and giving you forward guidance, but also me trading or me analyzing market live as it progresses. So I think that will be good as well. All right, I think you have everything you need for your trades for tomorrow, for Wednesday, and thank you very much for watching this video.